very good evening. You're watching The Money Show on ET Now. I'm Mubina Kapasi. This is the show where we get you your daily dose of personal finance. We answer your questions and queries as well. So first up, let's tell you what we have lined up on the show. It's perhaps going to be called as an ETF special. We are going to be having a chat on ETFs and the Nifty 50 benchmarked ETFs have certainly have reached quite a momentous milestone. They've managed to cross 1 lakh crore rupees in AUMs, and that is something that's really been grabbing a lot of eyeballs. So we'll be having Mukesh Agarwal, the CEO of NSE Indices, joining us on the show to talk about how can investors find the opportunity to invest in NSE Indices. We'll also then later on be joined by Vishal Jain, the head of ETF with Nippon Life India AMC, and he'll talk about how essentially does an ETF fit into your portfolio. So let's get on board Mr. Mukesh Agarwal, the CEO of NSE Indices, to talk about this and more. Mr. Agarwal, thank you so much for joining us today on ET Now. To start with, what do you think has led to this AUM crossing 1 lakh crore rupees? This is also only the Nifty 50, ETFs, not all the ETFs in total. So it's definitely a very momentous achievement. And that we just, in the last couple of years, we've seen a lot of traction. So what's really led to this? And if you could explain to us the significance of, these AUMs crossing 1 lakh crores.
Yeah. Thank you, Mubina. Good evening to you and good evening to our viewers. And as you correctly mentioned that the AUM tracking Nifty 50 index has crossed rupees 1 lakh crore as at August end. And if you look at the total ETF industry, the AUMs have crossed 2.07 lakh crores as of August end. And most of the growth, what you will see, the growth has happened over the last 5 years. If you look at 5 years back, the AUM of Nifty 50 ETF would have been around 1,500 crores. And the industry AUM was 7,000 odd crores. So the industry has grown from 7,000 odd crores to 2 lakh plus crores over the last 5 years. Nifty 50 ETF has grown from 1,000 to 1,500 crores to 1 lakh crores. So that is almost doubling every 5 years, so which is a very phenomenal growth. Now, why this growth and how this has happened? So if you look at why ETFs are doing well, because ETFs, they have their own inherent characteristics like low cost, diversification, and transparency. But what actually has driven the growth of ETFs in the country, there are a couple of factors. One is the government of India started disinvestment through ETF route in early 2014. So they decided to divest stocks through an ETF route, and they launched CPSE ETF using Nifty CPSE index. That was one. And second thing is the most significant event was EPFO, the pension fund, deciding to invest in equities through the ETF route. So they started investing somewhere in August 2015. And that is how we see the growth happening over the last 5 years, because they started with investing 5% of their incremental money into the equity markets through the ETFs. And at present, they are investing around 15% of their incremental inflows into the ETF. So today, if you look at in the ETF space, there are overall 82 ETFs which are available. The AUM is around 2.07 lakh crores, and out of which 10 would be the debt ETFs and around 72 are equity ETFs. And within that space, there are 63 ETFs, 63 out of 82 ETFs, they track Nifty indices. And today ETFs are available on 26 Nifty indices. There are 63 ETFs available. And total asset tracking Nifty indices is 1.6 lakh crores. And also one good thing is there has been increasing retail awareness. So 5 years back, if you would meet people, not many would talk about ETF. But today, if you talk to people, there is increasing awareness. Retail investors have started talking about ETFs, and that is also driving the growth.
All right. Mr. Agarwal, just wanted to understand from you that, when it comes to essentially tracking the Nifty 50, would you believe that, the ETF would be the easiest way to do so? Because, yes, everybody wants to buy large cap companies. It would be great, right? But the cost of holding that is obviously quite high. So do you think that, simply buying into a Nifty 50 ETF would be the easiest and not to mention the most low cost way of doing so?
Yeah, what you said is absolutely correct. Today, you can buy one ETF on Nifty 50 for as low as 120 rupees. Just imagine buying an ETF for 120 rupees on a Nifty 50 ETF, and using by investing 120 rupees, you are able to buy 50 largest companies in the country. I think that is the simplicity. And even if you look at the fund management fees, you have ETFs on Nifty 50 which are available for as low as 3 paisa or 3 bips, which is the 3 to 5 bips, which is the fund management fee. So low cost, plus you can buy in small amounts. And second thing is you can buy because the ETFs trade in the cash segment of the stock exchanges. So you can buy the ETFs anytime during the day while the markets are operating based on your convenience and the requirements.
All right. What sort of, or do you think that, in these last 5, 6 years, like you as well mentioned, it's gaining a lot of popularity. Do you think that people are now more interested towards ETFs as opposed to maybe even, the actively managed funds, which again are benchmarked, or which again use the Nifty 50 as their benchmark?
Yeah, so if you look at the total, see, basically ETFs are passive, actually the passive funds. And apart from the debt and equity ETFs, what I spoke about, you also have gold ETFs and you also have index funds, which are all passive funds. So today the total passive fund industry size is around 2.32 lakh crores, and the total AUM of the mutual fund industry is 27.5 lakh crores. So this 2.32 lakh crores accounts for approximately 8.46% of the total AUM of the mutual fund industry. And if you look at the same number 5 years back, 5 years, I think this number was around 1.5%. And even 1 year back, this number was 5.5, approximately 5.5%. So the AUM of passive funds, which also includes gold ETF, debt equity ETF, and index funds, was 5.5% 1 year back. Today, it is around 8.5%. And 5 years back, this was 1.5%. This clearly shows that there is increasing traction for passive funds, which includes ETFs, gold ETFs, and index funds. And that is the case what we are seeing. And also, like if you look at the main traction has happened over the last 1 year. So if you look at last 1 year, which is the period September 19 to August 31st, 2020, in last 1 year, the incremental inflows into the ETFs has been something like 65,000 crores. So out of 2 lakh 7,000 crores, approximately 65,000 crores have come into the last 1 year. So that has been the kind of case. And last 1 year, if you see, there has been first corporate bond debt ETF was launched by Edelweiss in association with the Government of India, Ministry of Finance, and that is called Bharat Bond 22, Bharat Bond ETF. And they have done the IPOs, two IPOs they have done. One is in December 19 and other one is July 20. So these two IPOs have mobilized 25,000, approximately 25,000 crores. Just imagine IPOs of ETFs, two IPOs of two Bharat Bond ETFs have mobilized 25,000 crores. So there has been a lot of traction in the last 1 year. And if you look at the yearly flows are just increasing. And another very interesting statistics which I would like to share is if you look at the ETF folios today, ETF folios are around 25 and a half lakh, 25.5 lakh folios which are there in the industry for the ETFs. Out of 25.5 lakh folios, approximately 13.5 lakh folios have been created in the last 1 year. So that is the kind of increasing awareness we are seeing for the ETFs, and that is the kind of increasing demand we are seeing for the ETFs in the country amongst the retail investors. Because retail investors account for approximately 98% of the folios, this 25.5 lakh folios which I mentioned, retail investors account for 98% of those folios.
Well, yes, that point with respect to the divestment done by the government via ETFs as well has played a major part in essentially bolstering the way money has come into this category ETF. Remember, folks, that in the last 2, 3 years, we've seen the government as well offer the shares that they own in various public sector enterprises, be it a Coal India or BHEL, NTPC, etc. They offered it to the public, but what they did is they packaged it together as an exchange traded fund. So for people like you and me, we can again, like Mr. Agarwal mentioned, at a lower price than perhaps what it would take for us to buy each share of maybe a Coal India or an NTPC. At a lower price, we have all of these shares clubbed together and with us, and that's essentially an ETF. The best part is, of course, that since it's an exchange traded fund, so you can buy or sell these funds anytime via the NSE, which is of course one of India's largest exchanges. Okay, Mr. Agarwal, let's talk about then the other point, and that is debt ETFs. We often say a lot about equity ETFs, for the simple reason also that equities as a category is, I guess, a little simpler for viewers to understand, for especially retail investors to understand, as opposed to debt ETFs, which often come along with a lot of jargons as well, right? So how do essentially debt ETFs, what sort of an opportunity is there for debt ETFs, in debt ETFs for investors to exploit or use?
See, let me start with the global first. Globally, if you look at debt ETFs, account for approximately 22-23% of the total global AUM. So, what is the global AUM today? Global AUM is around 7 lakh crore US dollars, or 7 trillion US dollars, out of which 22-23 trillion is the debt ETF. Now, in India, out of 2.07 lakh crores, the debt ETF accounts for approximately 14%. And that also 14% is mainly because of the Bharat Bond ETF, which was launched in December 2019. But for the retail investors, I would say debt ETF is one of the very, very good product to invest in, because the Bharat Bond ETF, the way it has been conceptualized, it is called fixed maturity ETF. We have ETFs which are available maturing in 4 different years, one in April 23, April 25, April 30, and April 31. The beauty of Bharat Bond ETF is because it is a fixed maturity ETF, so the yields are predictable. So if you get into this ETFs at an yield today, and if you hold on to this ETF till maturity, you know that you are expected to get this point. Like today, the 10-year ETF, Bharat Bond ETF, the yield is around 6.8%. And if you buy one ETF today, you know that after 10 years in April 30 or April 31, if you hold on till maturity, your returns will be approximately 6.8%. That is one. Second thing is the quality of the portfolio. These Bharat Bond ETFs are investing only in AAA public sector government-owned entities. The credit quality of this portfolio is very good. As I said, they are very, very tax efficient because they are not paying you any interest. It's a kind of a cumulative bond wherein the entire interest earned during this 10 years is paid to you at the end of the 10 years or on maturity. So because of which, what happens that it is fully tax efficient, because whatever capital gain is there, that is treated as long-term capital gain. And once you adjust it for the inflation index, the tax payable on the capital gain on the Bharat Bond ETF is very, very low. So there have been some calculations, like as I said, if you invest today, it is around 6.8%. And if you, after 10 years on maturity, after paying tax, because you would be adjusting for the capital gain index, the returns would be around 6% plus. So the tax payable on Bharat Bond ETFs is very, very low. And I think the way these Bharat Bond ETFs have been conceptualized, because we ourselves have seen that after the success of this product, a lot of AMCs have started talking to us. They are thinking in terms of launching more fixed maturity ETFs, and which is the right thing for the investors.
All right. Okay, great, Mr. Agarwal. So when it comes to, investing in mutual funds, again, we know, right, there are so many AMCs out there. You as well mentioned that the Nifty 50 ETF is one of the most popular ones. There are the most number of, funds associated with the Nifty 50 ETF itself. But even apart from ETF, there are so many in the large cap category itself, which are again benchmarked with the Nifty 50. For those individuals who may be a little confused as to, okay, which one do I pick, especially from the actively managed, especially for those individuals who may be financially not that savvy, or just have too much of their own business to take care of, and would like to leave this money management bit onto NSE. Do you think that investing in the ETF is the best way to do so?
I think you said it absolutely correct. First of all, I just like to correct that NSE will not manage money. We just license the index to the fund managers who launch these ETFs on our index. And for people, see, as you said, because we keep doing the studies, and most of the large cap funds which use Nifty 50 for the benchmarking, most of them are not able to outperform the index. There would be funds which are able to outperform, but I said most of them are not able to outperform. So for a layman or a normal investor, it would be very difficult to choose which fund is going to outperform, or choose the outperforming fund. And another data which shows that same fund need not be outperforming the index year after year. So today you might have fund one which is be the best performer. Tomorrow you might have fund 2, in third year you might have fund 3. So year after year, picking the winner is very, very difficult. So that's why the concept of passive investing or ETFs come in, exchange traded funds. For investors, you just buy the index and you don't try to choose the winner amongst by choosing the active funds, which is going to outperform, not going to outperform. So this is the simplest way of investing in the equity markets by choosing a broad-based index like Nifty 50 and picking up an ETF on that index.
So, okay, all right, great. And yeah, off late, any which ways, passive investing has been gaining a lot of prominence. And yeah, again, just a word of a word of sort of ensuring that our investors know NSE does not manage funds. It's of course the different AMCs that manage funds. But when it comes to an ETF, what these AMCs do is essentially that they essentially invest just how the Nifty 50 is curated. There's maybe just a little bit of tracking error here and there, but otherwise it essentially just totally apes the Nifty 50. So if, let's say, there's 30% weightage of banking in the Nifty 50, then even the Nifty 50 ETF, which may be managed by any AMC, will have roughly a 30% weightage. That's basically how it works. Even stock-wise, essentially. All right, Mr. Agarwal, what is the way forward for ETFs from here on? I think one of the best benefits of an ETF is the fact that it's exchange traded. So, I know the value of my fund, whatever I own, because I can immediately find it out as to what the price is on NSE. But how liquid is it? I mean, is it very easy for me to buy or even sell, my funds on the exchange?
So what we have seen that the trading volumes on the ETFs, on the equity ETFs and other ETFs also, the trading volumes have been increasing. They are increasingly becoming more liquid. So there are some ETFs which are available on which the liquidity is quite good. So I would say that investors can buy and sell ETFs with quite an ease. So that is not a problem. And so other thing is, I think going forward, because we keep one of the job of us in the index companies is to keep launching new indices. So we launch new indices which will help in the AMCs to launch more ETFs on those indices, and that will offer a variety to the investors. So investors can pick and choose from what strategy they want to follow and which index to they want to invest in. So like we have ETFs available on Nifty 50, we have ETFs available on Nifty Bank, we have ETFs available on Nifty Private Bank. If someone wants to take an exposure only to private bank stocks, so they can choose an ETF which is tracking Nifty 50 Private Bank, which has got a portfolio of 10 private banks. Similarly, recently people have launched ETFs on Nifty IT index. So you have two ETFs which got launched on Nifty IT index in the current financial year. Again, if someone wants to someone has a positive view on IT industry and they want to take an IT exposure to IT stocks, they can buy the ETF tracking Nifty IT index. So there is a wide range of ETFs available in the market on our NSE exchange. Depending on your portfolio allocation, depending on your investment strategy, an investor can pick and choose which ETF they want to invest in.
All right. Mr. Agarwal, according to you, what are the challenges before, Nifty 50 ETFs?
I think challenges, most important challenge will be, I would say, creating awareness about the retail investors. Now also when I meet retail investors, not many people are aware of what actually is an ETF, what is the benefit of investing in ETF. So we as an institution are focusing a lot on creating awareness about the ETFs amongst the investors. So they realize the benefit of passive investing and ETFs. I think that is the biggest challenge, I would say. And second would be again increasing liquidity, trading volumes. As I told you, as you also said, that trading volume has been increasing, but to improve liquidity, trading volumes need to increase more as we move forward. But I think that will happen. That will happen. But I think creating awareness among the retail investors would be the biggest challenge, and I think that's what we as an exchange and we as an institution are focusing on. Even I think the mutual funds and the AMCs are focusing on the same thing.
Great. Well, Mr. Mukesh Agarwal, it was lovely speaking with you as well, and I'm sure all of our viewers have gained a lot from hearing you on how they can invest in ETFs, why it sometimes becomes really difficult to choose, among a variety of funds and decide which one will outperform the index. So instead, a Nifty 50 ETF just gives you that easy way out. And I'm sure like a lot of retail investors are now coming to terms with that, because we are seeing this steady increase in the AUMs. The Nifty 51 has crossed 1 lakh crores already. It's one of the most popular ones. The most number of ETFs at this point of time are, benchmarked with the Nifty 50. Thank you once again, Mr. Agarwal, for joining us today. And folks, if you've missed out on this conversation, you can catch it on ET Now's YouTube channel. For now, we'll take a very short break right here on the show. But when we return, in our Meet Your Fund Manager segment, we will be talking to the head of ETFs with one of India's largest mutual fund house. Don't go anywhere.